Welcome back, guys, to another episode of the Self-Made Podcast. And today I have Arjun Dhingra. He is a top performing loan officer. And Arjun, thanks so much, man, for hopping on with us. I appreciate your time.
Thanks, Sean. Thanks for having me, brother. Big fan of what you're doing, man. So this is a big honor to be involved.
Man, it's the same, man. I'm glad we finally got to connect. So tell us a little bit about yourself, how you got into the business, what kind of production you guys are doing. Because if you guys don't know, Arjun's brother is Neil, and we had the pleasure of interviewing him before on our podcast. So that's kind of how we all got connected. So we're excited to hear, your side of the story.
Yeah, very cool, man. So we got in the business together, my brother and we had another partner that I went to school with up in Reno about 20 years ago. And all of us were kind of in school too at the same time, which was, the fun part of it in a way.
Yeah.
But we were literally living in a fraternity house, and we started doing VA streamline refinances in Reno, but for a company based out of Vegas. And this was back in the day when everything was handwritten. 1003s were there was
Yep.
nothing electronic. I mean, nothing was automated at all. It was all paperwork and copies and fax machines. Right now, it's about who has the best smartphone, but back then it was about whose fax machine was most efficient. So
Right.
who could send the most pages, without them getting jammed. So we got started in that business or in that at that time while still going to school, and it was fun and exciting because we, signed on an office lease and started a call center, and we hired telemarketers that were basically friends of ours in college, and we're paying them per application that they could get. Just kind of figuring out how to run a business as we went. Nobody really knew what they were doing.
Yep.
So we learned through a lot of trial and error, but we realized, that opening a branch and kind of starting to scale this thing because of the potential there, that the market was really ripe for it. So instead of working for that group in Vegas, we just decided to become a branch of that company,
Gotcha.
but just operate in Reno. So we started that. We started putting up really good numbers as a branch and forming some sub teams, hired and trained some really good loan officers. Some have gone on to work for really big companies and are huge names in the industry still today. So that was fun. And then of course, we hit the market correction about 10 years ago.
Yeah.
And a little bit prior to that correction, I'd moved off to the Bay Area just because I wanted to live in the city and kind of expand my network. I had a little bit of a network there, but I just wanted to, start growing upon it and tapping into it more. And obviously, understand what nuance was involved in the real estate market for the Bay Area versus, the Reno market. Obviously, two very, very different markets. So did a lot of back and forth, and ultimately ended up, after a lot of that back and forth, staying out here.
Gotcha.
Just because I grew my network and was able to kind of fill a void, I think, that a lot of lenders can't, because it's very much a big market bank, a big bank market.
Yeah.
I said that backwards. So it's a big bank market where a lot of people tend to align only with the larger institutional banks, and kind of a mortgage strategist type advisor role really isn't there. And,
Gotcha.
That led me, kind of in fast forwarding a bit here to the whole branding and having an online presence, what really made me kind of see the opportunity there, because nobody in my space was doing it. But, taking it back to the chronology there. So we made it through the market correction, obviously.
What was that like for you guys? The crash?
It was tough, man. I mean, there's no, trying to sell that a different way. It was really tough. There was a lot of uncertainty. We didn't know what was going to happen. I mean, we went from doing really well to like literally overnight having no products to offer, having loans that we closed and funded that had to either be bought back. I mean, these were horror stories, or that we were never going to get paid on. And so, I mean, it was a really tough, kind of uncertain time. We didn't know what was going to shake out. So we had to wait for a lot of the regulatory reform to take effect and see what's going to happen. And it did. It took some time. I mean, we went many months without collecting a paycheck.
Yeah.
And
what
then
do you guys tell some of the LOs that you guys work with today that maybe missed that part?
Yeah.
Because I know, there's a lot of guys, even, that we talk to recruiting wise, that maybe they missed that, part of the industry, and they come in, they have a little success now with refis and where the rates are. And it's like, man, you guys missed the part where, like, I think a lot of us earned our stripes, right? In that time frame.
Totally. I mean, Neil says this a lot, you know, and we've said it together in some collaborations that it's you know, I think he may have even taken it from someone else, but it's everyone's an expert in a bull market, right? So when the market's ripping, you're high on the vine there, and everything's going great, and it feels like you kind of feel like you have the star in Super Mario Brothers, like you're invincible. You just run hard. You just run hard, get through the level hard, but like everything you touch just gets blasted and blown up, and you can't, you know, like you can't lose, and that's a very addictive feeling, you know, for loan officers now. And then it was, you know, over 10 years ago, pre-market crash, and then the rug gets pulled out from underneath you, and you have to kind of scratch your head and then go back to wondering and asking some pretty hard questions of yourself, like, you know, was I ever really any good at this, and what is it that I really do have to offer, you know, and how can I mean, everyone can do it when it's easy, but now it gets harder. The environment's tougher. You've got regulations. You've got limited product line. You've got to really work and be a advisor and a strategist for people, and a real aid and partner. So that separates out a lot of people. And I think for guys, bringing it back to your question, your loan officers in this current market that didn't experience that, there's no way you're ever going to be able to recreate that for them unless they go through something like that. But I think they can. If you're out there and you've only been in the industry for the last, you know, within the last 10 years to where you've experienced, you know, a real run up in market share and the ability to help lots of people, is number one, don't take it for granted. And two, you know, stick to your principles and the stuff that's been, you know, that is being preached by so many people in the industry. Lots of guys that you've interviewed as well. And the same stuff you talk about is, you know, take care of the client, be consumer centric first. Don't be transaction oriented, be really valuable so that you're essentially irreplaceable. And if you do that, you'll be able to survive any kind of tough times, because it is a great industry and it is a great market space to be operating in, provided you're doing the right thing.
In the Bay Area, you know, like you had touched on, a lot of the big banks, and I'm sure a lot of those guys up there are making great money, so they're probably private wealth clients. What are some of the things that you do that kind of separates you from the rest of those guys?
Well, what I do is I go right at them, because I have an advantage in being, you know, as a correspondent lender that doesn't have handcuffs on me, with being able to forge a personal brand and have a voice in the online space. And I can really run, you know, within regulatory confines. Of course, I can run wild out here, right? Whereas all my colleagues that I compete with for market share that are at larger banks, they cannot do anything at all.
Good point.
They have one thing they can offer, which is unbelievable pricing, right? Like big banks can buy up the market at any given point that that management decides to really turn that faucet on and try and absorb market share. So they can offer amazing rates. But they, you know, as of late since COVID hit, there's a lot of strings attached to it and fine print. And a lot of that is that people have to move over their investment accounts, or they've got to have high levels of liquidity with those banks.
Right.
And not everyone fits that. So it kind of goes against the whole message that they put out, that they're for everyone and they want to help everybody and that they're invested in the community, when at the same time, out of the other side of their mouth, they're saying, but, you know, you got
you got to have this,
but it's in the news, you know, I mean, but you've got to have $1 million in the bank with us.
I think I posted that article a few weeks ago.
Yeah. So that just eliminated a lot of the market. So I go right at these guys with my online presence. I don't have any qualms with taking jabs at the big banks or consumers that are looking at the big banks and saying, look, you know, what they have is a great rate, and that might be wonderful if you qualified for it. But the reality is, you know, they're putting a lot of strings attached to it, and they're almost saying you have to be worthy of it. And I don't feel that way. You know, of course, you've got to be credit worthy and meet guidelines for loans. I'm not saying everyone can just have anything, but if they're putting up such a high wall that you've got to climb over, I'm coming at people and saying, no, you know, like, screw that. You don't have to, you know, be like that. You are good enough. What you have on paper is good enough. I don't care how much money you want to leave in the bank, not having the bank. As long as you meet loan guidelines, you can move forward. So that's how I go after them, you know, directly in that sense. And then just helping get that message out so that my colleagues, my, you know, real estate partners, wealth advisors also can be, you know, singing that same tune for me to their client base.
That's good. Yeah. Here in Vegas, obviously that's, you know, far and few between we come across that, but I mean, those are all great things to remember. I think as originators is, like you said, go at the big banks. I mean, sometimes they put out these guidelines, and I know I reposted that article that you were mentioning, and just
Yeah.
telling my database that, hey, just because you see this online, that doesn't mean that this is applicable to every bank. Every lender is not going to follow this. And I think a lot of people see those things and they automatically make that assumption.
Right.
So, like you said, you do have to kind of make it black and white, to where, like you said, it's not about, singling out a certain person or anything. It's like, hey, you guys are all potentially, qualified. It's just, as long as you meet the guidelines.
Right. Right.
Um,
Very
So
true.
you guys make it through the crash.
Yeah.
You guys withstand the storm, and then how do you guys start to build up quickly after that, or did it take some time for you guys to start ramping up again?
I think it took a little bit of time because we had to kind of figure out some different systems and such, and still it's always an evolving process. But we changed lenders or places that we were affiliated with another time after that, and then really landed at a great bank that we've been excited and proud to be affiliated with, and that's down there in Vegas as well. So and it was really more about the mix of the right people.
Yeah.
The CEO is an amazing guy, and all of their management and the people there, and the culture is great. So that gave us the opportunity to kind of thrive and be able to do more of what we want to do. They gave us a lot of freedom to do that. And yeah, I mean, it was a bit of a process to kind of get things ramped up, but obviously the environment was good for it, and that we were functioning in a really good rate environment. There was a lot of great product coming to the market, a lot of non-QM lending that was coming into the space,
Yeah.
as too, because you had access to a lot of all the same products as well.
Yeah.
And so we just really tried to push that and be a differentiator and be something as an alternative to who we compete against, which for me in my market was and still is the big banks and what they have to offer. So that's kind of where we made the sprint towards. But it's been it's been a good run over these last several years, and obviously now too.
Yeah, absolutely. If you could go back in time, maybe just right before the crash, would you have told yourself, maybe one or two things that if you could
Yeah.
look back in hindsight and be like, hey, I wish I would have did this differently?
Number one, I would have databased better. Everyone in our industry, this too real well, is that we're constantly being preached to that your database is your gold mine.
Yeah.
It's your book of business that you can go back to, and if you've built one up for so many years, it's a sin to have let that just slide or evaporate and not tap into it, because you can turn that book over so many times. If you've been in the industry 10 years, you may not have to market to another client ever again. I mean, there's enough clients and leads and prospects that are in there that you could constantly be offering different strategies to and helping them move up, move down, evolve, whatever. So that's definitely, if I look back, I mean, that would have been the first thing I would have been telling myself from day one in 2001 is, make a spreadsheet, you dumbass, and put in every single name and email address, because one of these days you're going to need all this stuff instead of just churning and burning through them at such high volume.
Yeah.
So that would have definitely been it. I think that, aside from that too, along the same lines of databasing, is just creating really sound systems for follow-up and post-closing engagement. I think that's so key, because people are only as loyal as their options. They might love you to death. I've had really good friends, like guys that I know well, that I went to school with.
Yep.
And I don't know if it's just my friends or if it's just if it's more of a syndrome of just consumer mentality. But I've had friends that I did their loan for them years ago. We know each other well, really well. And for some reason, just because I wasn't in touch with them,
they went somewhere
a couple
else.
years after, somebody just hit them up for something and ended up buying a house and then doing their loan through them. And then I checked in. I'm like, what's going on, man? He's like, oh shit, dude, I forgot you did that. I said, you forgot that I did that? Like,
right.
It's my job, man. Like, that's, of course, it's what I've done for 20 years. I haven't done anything else. But it's a very harsh reminder that if you're not in people's heads, it doesn't matter who they are. They're only as faithful or as loyal as their options are. And if better options present themselves, and it may not even be a better option on paper, it's just a better option in terms of it was more immediate. It was right there. It was just something that was in connection. So yeah, that would be it. I think just those two things. It would be databasing every client I've done business with, and just having a better post-closing strategy for engagement and keeping in touch with people, because that could have, I mean, who knows where I'd be, man. If I'd done that.
It's I mean, I think those are two excellent points, and I always try to drive that home, even with our team too. It's I had this conversation the other week, and I told one of our guys, I was like, you're doing more business than you've ever done right now. And you have to almost, in a way, slow down to go fast again, right? Instead of just burning through these leads and burning through your closings, like you said, you have to have a great database, because if you half-ass that thing, a year from now, when you go back, you're missing a phone number, or you don't have an email, or you forgot to put the address of where they bought, or whatever, maybe the loan types. And now you can't go back to reconcile that, or send out any kind of information, because you're always going to be missing something. I know I was guilty of that when we first got in, because there was just so much data that you'd go back and I was like, shoot, I don't have that 1003, or I didn't have that. And you move companies and things get lost, that you don't even have the right phone number for the client, and now you lose that guy.
For sure, man. I think that's key, Sean, what you said. Like, taking time out to just stop for a second, slow down, and work on your business in terms of, just cataloging things, checking in, making sure you're doing things the right way, instead of just running so hard that you leave this like mess behind you that you keep saying, I'll get back to it. I've just got to keep churning and burning through deals right now. But that mess will end up being so big that you can't get back to it, or you just forget. But I think that, and if there was one other small thing I'd add onto it, I would taking time out to make sure you slow down a little bit and work on your business. But then also, that even as silly or cliche as it sounds, taking time out to continue working on yourself. So that you are staying dynamic. And I don't mean yourself as in like going off and meditating. Maybe you need to do that too, which I do at least once a day, just to even break from like the phone calls and everything just coming at you so much. You just need to stop, zone it out for a second, and recenter. But also just taking time to work on your own development of your own knowledge and advancement within the industry. Be a little bit more dynamic. Take some time out to just stop, read up on trends, market information, maybe learn new things in general that don't have to do with the business. But if you're not working that side of your brain also, you can get pretty narrow and rigid, and you'll come out of this a few years later. I mean, you might have a lot more money in your pocket, but you won't feel like you've grown at all. You've just made and earned, but you didn't do any growing at all.
Just on that hamster wheel, just running. And we're talking about this before, but
man.
Just by chance, we're both reading the same book. So shout out to Trevor.
Awesome,
I came across him on, it was with Dave Savage on Mortgage Coach. So, looking forward to finishing that book. But that's such a coincidence. We're both reading the same thing right now.
One world.
So slowing down the database, and just taking some time for yourself to keep growing. I mean, those are all big things to take into account. Now, I know that you're also in martial arts, right? So tell us a little bit about that, how you got into that, and just kind of where you're at, because I know you're also part of a coaching team, right, with Team USA.
Yeah, so I now have the privilege of being able to co-head coach the national team, so Team USA, with another partner. But prior to that, I competed on the national team for about 7 or 8 years. And then I've been a student and had been training in Taekwondo for 33 years now.
Wow.
So I started when I was 8 with a very standard classic story that I was getting bullied in school and picked on. I was really skinny. And so I got picked on a lot. And then, the original Karate Kid was out at the time, the real original one, not the Jackie Chan one. So that people know there was one that came before that. I watched that, and then I just, I ended up in a class, and the rest was history. But definitely something that's been very, very much a formative energy in my life, and still is.
You and Neil used to butt heads and go at it, or what?
Yeah, we did it together. Neil was really good at Taekwondo for a long time, and then he stopped training, man. If he had stuck with it, I mean, he was really good.
Oh wow.
Yeah, he was a bit of a pit bull. He just charged people, and he wasn't afraid of people when he'd fight, so it was good. But we had a lot of great battles, and it was a lot of fun. It was a memorable thing doing that with your brother growing up through all those years when we were in elementary school and middle school, and then around high school is kind of when we stopped doing it together, just picked up other interests and whatnot. But it was fun.
How do you think maybe some of that you've gone through, the trainings and the discipline, has helped you with your business today?
I call them really fortunate synergies, because it's by pure accident, but I've been able to draw from, and I still do to this day, I draw from both worlds and apply. So I call it, and I tell my athletes this that I coach, I call it the Rocky 3 moment, which is everyone who watched any of the Rocky trilogies, Rocky 3 was my favorite. And most people, if you poll them, I'd say the hands-on bet that everyone would generally say their favorite Rocky was 4, where he fights in Russia. But for me, it was 3, and it was because similar to how people were in the mortgage space, and then I went through a bit of this during my competing years, Rocky 3 is that, he's doing really well. He's a world champion. He's high on the vine, and then his whole world comes crashing down. His coach dies. He gets the shit beat out of him, and he loses. And he starts to wonder, was I ever really any good? And I went through that in the mortgage space, 10 years ago, because we were all scratching our heads wondering, was I really a great producer, or was it just that, anyone could do these loans? And then I went through the same thing as a competitor in martial arts, because in 2007, it was my first stint at competing in a world championships. I qualified, and I was fortunate to put together a dream run, and I won the gold medal.
Damn.
But I'd not experienced any real setback competing on that level. In other levels, yes, but not on that level. So I took a few years off from competing. I still trained, and then I went at it again in 2012. But I went through a lot of personal challenges in 2012. Some family stuff, some professional stuff with a relationship, and then I ended up losing, and I was not expecting that, and it really blindsided me. So I had to, similar to what I did in the mortgage industry 10 years ago, and then also as an athlete, and what happened in the movie, was retool myself. I got in with the right coach. I trained up my whole, I changed up some things that weren't working as well on the training side athletically. On the mortgage side, a mindset and development coach as well, and a performance coach that I'm still with after 10 years. And I just kind of retooled and recrafted myself and put myself back together. And this recalibrated 2.0 version of myself that I kind of put together and learned from those setbacks and those lessons put me on to another level. So the setbacks, as painful as they were in both worlds, were the most important things to have happened. Because if they had not happened, I would have never known that I needed to, retool things.
Make some changes,
make some changes and evolve and get stronger in a lot of areas, and point out the inadequacies and where I wasn't really as optimal as I thought I was. Because you don't learn any of that from winning. You have a huge month if you're the top producer. You're simply rewarded for being prepared and seizing the opportunity. You don't learn anything from it. The same thing with winning a gold medal on your first time out. You learn in the losses and in the setbacks. So there's no real losses. It's basically just wins and lessons, I like to say.
Yeah.
Instead of wins and losses. So if you're learning in those and you're evolving. So for loan officers and people in the real estate space, things are good now. But there was even, there were some moments there a few months ago when all of this hit, we didn't know, like, what's going to happen?
Absolutely.
Investors are pulling out. Is this 2008 all over again? Oh shit! It was kind of, for all of us that went through, like, you came in the industry at the same time, it was a very familiar feeling.
Oh yeah,
but
that was the first thing that ran through my mind back in March. I was like, oh man, here we go. Is this like, how is this going to play out? And I know, just me personally, at probably there was a good 2 weeks, either in March or like April, that I was kind of, we started the month slow, and I was like, oh shit, man, is this going to be like, is this going to be where it starts to go south, And I'm like, well, I know we're busy, the pipeline's there, but, then obviously it came back. But yeah, I mean, sure. I know I had, that moment of doubt where I was like, shoot, is this really about to like happen again?
Yeah. Yeah. No, we all said it, man. So it was a crazy feeling, but then it quickly turned. Yep. But who knows? I mean, what's around the corner next time? It could, there's these things aren't a matter of if they happen, it's a matter of when. Yeah. So you want to be ready. You want to be constantly evolving and have yourself in the best possible position to be able to either pivot, adapt, roll, do whatever you need to do, and not think that you're invincible, because there are changes. There are things that we have to, adjust with. They're only inevitable in this industry, and all industries for that matter.
Yeah. So how important was, I guess, just really being honest with yourself throughout your career, whether it be, Taekwondo or mortgage, because obviously that's kind of an individual sport, right? I mean, you're not competing with anybody else but yourself on the mat at that time.
Yeah.
I grew up playing basketball and baseball, football. So it's always, you're on a team. There's, right. 4 guys on the court with you, or, 9 guys playing baseball. But, how much of that has helped you kind of keep maybe yourself honest with what you're doing? because like you said, right, you can have a good month, kind of get high on your own supply, and the next month you could be the bottom guy on the totem pole.
Yeah, and that happens to me still. I'll have a good month, and then because I'm more focused on some other things, which because we all know being in this industry, we have to wear a lot of different hats.
Yeah.
As originators, and then people that are kind of running our businesses and guiding it and trying to keep our teams organized and keep things flowing. Then we got to market, which is another full-time job in and of itself. And that marketing now has so many different avenues or spaces to operate in, whether it's on just purely in the online digital space. Some people are doing marketing other ways. Some people are only doing large form media, whatever it is.
Yeah.
These are all areas that we're constantly being pulled in. So it takes a lot of attention, and you'll have those moments where you get high, like you said, and then you have it may not be there. So you got to keep striving for consistency. You got to keep getting up, keep trying to do it better. Know that it's a process, and constantly just try and improve and learn. But I think evaluating and checking in with what worked, what didn't. Well, I do this with my team, and I'm sure you do this over there as well, because you guys have a great culture where you're at. We'll evaluate at the end of the month, or almost at the start of the next month, what worked last month. I talk about this even when coaching with my guys. Like at the end of the day, okay, what worked well today? If we've got a 7-day tournament, so we've got a lot of different rounds we've got to get through. But let's see what worked well. Okay, what didn't work well? Where do we have to improve? How can we improve it? Is there enough time to improve it this month? How do we adapt? So constantly checking in, constantly evolving, and asking those questions, and not. You're only as good as your last good, your last good round, your last good win, your last good month, and you can't rest on it. I mean, you can enjoy it maybe for a brief moment, but then it's on to the next one. So it's there's no time to really kind of get, like you said, just to get high or stay high on you.
Yeah. What and I tell this with our team too. You really should reflect every month. I mean, I know I do that, and we look at. I mean, I do it weekly. How many credit pulls we have, how many applications we did, how many pre-quals we completed. That way you kind of get an idea, of how that week went. Like you said, it's you go by, 2 or 3 months right now, like you could be super busy, and now you're like, you have no barometer really as to, was it really good, or were you just busy?
Right.
So you guys do check in every single month with your whole team, and are those some of the same things that you tell them to keep an eye on, like the pre-quals and credit pulls, all that stuff?
Yeah, just gauging the metrics. How many apps are being filled out? Where are we losing things? Is it that we've got a high number of leads, and we're converting them into applications, but they're not actually turning into deals that are being processed and underwritten? So what's the gap there? Okay, then let's look in that space where this fall through is happening, and see what we can do to kind of tighten that bridge so that nothing does fall through. Yeah. But unless you're really looking and evaluating this stuff, it's very easy to just get swept up, and like you said, end up with a month where you felt really busy, but you didn't really do a lot. You were just kind of running around. So that's what we try and avoid, because it is very, very easy to get into that pattern, and it's obviously not a good one.
Do you think that sometimes maybe we don't want to be held accountable to that? Maybe as like a producer where you feel busy, but yet you kind of don't want to know how that, those numbers actually played out. Because I think sometimes, I have these conversations even with realtors, right? It's like, what's your goals for next year? And they always throw out this number. I talked to this guy about trying to do some stuff on social media, and he was like, I want to generate 12 deals off of social media, and he's done none.
Okay.
I was like, well, you need to start posting daily.
Yeah.
Or else you'll never get there.
Yeah.
And when I said that to him, he kind of looked at me, and he was kind of like, oh shit, I don't know if I can do that. But do you think some of it's maybe, people just don't want to be held accountable to that, knowing like all the work that has to go in? Because I know you mentioned you have to, really stick to the process, right, and be consistent.
Mm-hmm.
How important is that?
Yeah, no, it's hard, man. And that's human nature. That's with everything, right? That's why gyms make so much money at the beginning of the year, because they know damn well no one's going to stick with this. If everyone got in great shape, gyms would be out of business, because eventually they'd figure it out and they could self-manage and, take care of their nutrition outside of the gym. And then, they wouldn't have to go as often. They'd scale back to like a, kind of a seasonal type of membership instead of full time. So it's human nature to want to do something. And like you said, in the case of that example you made, like, I want to get 12 deals off social media, but at this point I've done 0.
Yeah.
Okay, so that's a great goal, but we're also not realistically scaling that, or, you know, creating a bit of a ladder for success there. So as soon as this goal is not met, which it inevitably wouldn't be met because I was too ambitious,
Yep.
then you just get discouraged. You say, oh, screw it, or I'm not going to do it. And you don't hold yourself accountable to wanting to do it. And then you just kind of fall back into what's comfortable, which was whatever it was that you've been doing up to this point. So
Yeah.
I think it's important that you set realistic and manageable goals that are going to stretch you. They're going to make you reach, make you a little bit uncomfortable, but there's some wins that you could get. It's winnable. So you got to be realistic. And I think the only way you do that is you don't do it on your own. You either find somebody that can hold you accountable, someone who's done it already, and you know, almost like a mentor type relationship, and ask them. Talk to people on your team, people at your company, guys that you're working with, and whatever, and that you see. Or, you know, like much like how you and I connected, man, in this space. The online community is so collaborative and far more cooperative and as non-pretentious as anyone could give it credit for these days. I mean, it's so open, and you'd be so surprised with, if you just throw something out there directly to someone, they will reach back, and it'll shock the hell out of you. You almost think, no, this can't be this person. You wrote me back. And people are willing to help. People are willing to share. I feel like this space has made people a lot less selfish and a lot less closed-minded about their ideas, and feeling so proprietary about their methods and their you know, their strategies and secrets. And they're really up for collaborating and sharing. So ask people, rely on them, lean on them, and you can set some more winnable goals for yourself, and you can get those wins and then start to build from there. And that's probably the best way to kind of be able to check in with yourself, but also hold yourself accountable to where you're not getting discouraged.
Yeah, I think that's such a key point that you just made. You know, it's the offline and the online, trying to connect the two. Leo, our content director, always talks about that, you know, for our team. And it's funny because we were talking about this before, and I even shared the story with Neil, is that, you know, I came across his content a while ago. And this was, you know, at another company before I really started to dive in and wanted to do social media as part of my marketing, you know, pillar. And I was like, man, this guy's doing amazing things. I love what he's posting, how he says what he's saying and everything. And it wasn't until, I would say, maybe 6 months to maybe even a year later, I came across his stuff again, started following him, and we started the podcast at that point. And I wanted to reach out. And like you said, you never know what they're going to say. And I was like, man, let me just send this guy a message, see if he even responds. And sure enough, you know, we get connected. And I think just having that growth mindset of there's enough business out there for everybody, you know, even though, you know, you guys are in Reno and we're in the same state, I'm not going to take his clients, right? And he's not going to take mine. So it was just kind of cool to be able to connect, collaborate, and really just kind of see what are you guys doing and what we're doing, and just share that together. And I would, you know, urge anybody that's listening to this, regardless if it's real estate or mortgage or anything, that reach out to other people that you're following with online, right? It's called social media for a reason. I think that's so important because I know we've got some ideas and we've made some strides just based off conversations that we had with people. So I think that's something that a lot of people are probably shying away from that should definitely take advantage of.
For sure. Absolutely, man. Absolutely.
So what are some of the more tactical things that you're doing right now with your team that you guys maybe have been doing in the last 90 days, you know, in this pandemic?
I think just really trying to be, it sounds like, you know, almost silly, but it's just trying to be as helpful as possible. So recognizing what the average homeowner or consumer or person out there in this current environment, in this current economy, what are they going through? And for most everyone, it's a lot of the fear of the unknown, the uncertainty, the mounting bills, the financial uncertainty, really. You know, like their job might be safe, but they don't know how long it could be safe for. So there's unique opportunities right now to consolidate debts, to lower payments, wrap things in. And people in our space as mortgage advisors have a very, you know, it's a heavy badge of honor to be able to wear, but you pretty much have got this wand where you can help people's problems literally disappear or, you know, really put them at ease. And so it's about making as many touches and impacting as many people positively as possible. and that market is almost endless. So we're always looking, even from a content creation standpoint, always just thinking about what is the average person worried about. Okay, they're worried about, this is a recession, and recession for so many people has such a nasty, terrible, scary feeling attached to it, because
goes right back to 2008.
Yeah, and that was a very, very significant one, but it's also not a normal recession, right? Like recessions happen by definition. It's just 2 consecutive quarters of negative, of slower growth or negative growth. You could be in a recession and not even notice it because things are so great for your industry. I mean, the last one was more of a widespread depression, if you will, and it was global. And this one, we're obviously, there's no disputing it. We're in a domestic and also a global recession, just because growth is going to slow, and it already has. But people don't need to be so scared if they're being met with the right kind of information and the right kind of strategies and advice and guidance with that. So we're always thinking about, like, what are they most afraid about, and what kind of message and content can we put out there, or what kind of outreach can we provide to dispel that rumor, or to put that fear at ease, or to solve that problem, or make them feel less stressed out. And it's like, again, it sounds silly and it sounds almost like it's the same thing that everyone else is doing, but I personally, like, for me and my team, it's about doubling down on that exact strategy, and that's the only thing we're really thinking about.
Yeah. What about to some of your agent partners? What have been some of your words of wisdom for those guys?
Well, I don't know, man. There's not much wisdom I can provide these people, because everyone knows that real estate agents are the smartest people in the world, right? So you can't teach them. No, I'm kidding, man. You can't teach them anything. But no, I think, for my partners that I work with here in the Bay Area, I'm trying to advise them on doing the same thing, because for so many of them, and you know this too in Vegas, because I follow a lot of agents there online, a lot of them do the same things. And I think agents can fall into this trap of, like, they don't necessarily feel too comfortable with a personal brand. So what they do is push out their brokerage's brand, or they just talk about what they just sold, or how they're a top producer and all their awards and this, that. But that doesn't separate them from anyone. It doesn't tell any of us, or tell a consumer or a homeowner that might want to sell, or an aspiring homeowner that might want to buy. It doesn't tell them any different story about them, or create any separation. So I always try to advise them, like, look at this content of yours. Like, I'll sit there with them and look at your feed. What is this saying to you? Like, don't take off your real estate hat and just be average Joe. What does that say? And for most of them, it's kind of an uncomfortable answer that they have to give. And it's like, that guy's really great, or that guy really thinks he's good. I'm like, okay, but what does that mean to you? Everyone's good, of course. Otherwise, they wouldn't be in the industry. So
you're not going to post shitty content and then, hey, we lost this deal, we lost this.
Yeah, man. You're single and you're on Tinder. Are you putting up your best pictures, or are you putting up your shitty ones? Like, it's the same thing. You want to present yourself in the best possible way. So that is, I think, that, like, kind of giving my realtors and referral partners the same type of advice. Like, try and find a way to be more valuable, be different. Don't put out the same garbage and the same stuff that everyone else is, and just think that now that I did it, I can check that box. And it's almost like a relief. Like, they just want to put out something because they're so afraid of figuring out the right thing to do, or spending some time thinking about it and really crafting something that is useful and engineered and purposeful and meaningful for the audience, and just put out something and say, okay, I'm good. I posted today, or I posted for this week, but what good was it? So that kind of advice is what I like, try and help them with.
At what point in your career did you take to social media to start posting and putting content out? Because, since we got connected, I mean, your feed is awesome. I love the way it looks, it feels, the way, you guys are posting stuff. So where did that inspiration come from, and what was kind of your reasoning behind that?
Well, I always had a presence on social media, but it was only social the way all of us did, right? Like, we all had Facebook accounts and MySpace accounts, and I had a LinkedIn account only because I had to have one. I never utilized any of these things necessarily for business purposes, even though by accident, sometimes, because I had a network on Facebook, for example, and I would sometimes write something about mortgages or something I'm doing. And this was years and years ago. And without ever connecting the dots, which I want to go back and slap myself in the face for, I would get like 3 people send me a message or reply back in my comments, hey, man, call me. I need a refi or something. I should have been doubling down on that strategy a long time ago, but I never put 2 and 2 together. This was really an effective means for reaching more and more people. I just kind of, I would be posting my pictures from my vacation or partying with friends. And then, oh, by the way, I'd say something about mortgages or whatever, just to remind people that it is what I do. Or I would be doing it out of pure ego sometimes, but it would end up leading to business accidentally. So that years went by without me recognizing that this is really a channel and a space that I need to be more active in. And then a couple of years back, Neil had gotten tickets to a Gary Vee event in Miami, Agent 2021. So it was two Januaries ago. Yep. And he said, he said, come with me, man. I'm going to go. And he's like, and no one's still to this day, Neil keeps it very close to his chest on how he's landed into Gary Vee's personal phone and like been able to like land stuff with him. But he's like, I even got a collaboration set up with him, man, so we can do something together. I was like, oh shit. And I've been reading Gary Vee books from years ago, but I never connected that with what I do for a living.
Yeah.
So we went, and it was really transformative in the sense of like, that you need to, this is just the space you have to be. If you don't have an online brand and you don't have an online presence, you're going to be dead in the water.
Say that again, because there's some people that are out there that are still fight us on this.
No, there's no fighting on it. It's like the same thing as saying, are you going to prospect today? Or are you going to, tap into your database? Are you going to market today? The answer is yes. It's the means in which you do it that have evolved, and that's what this space is. So if you don't have an online presence, if you don't have a personal brand, if you don't have something that is talking about you when you're not talking, which is the definition of a brand, essentially, what's being said about you when you're not in the room, then you're going to be dead in the water. You'll just be categorized, commoditized, put into a box, and cast aside because there's already too many of you. So why would you want to stay there? So you have to do it. So we recognize that for different reasons. Neil in his market in Reno and me in the Bay Area, I really realized it, personally speaking, that everyone would think of big banks first because the agents would always refer to them. They didn't know. I mean, I might have had a network out here at a grassroots level and from a person-to-person level, but I was never scaling it the way I could. I was never tapping into it and doing the reach to where between the hours of midnight and 6 a.m., it was working for me just as well as it was when I was out in the workspace. Yeah. Making it a 24-hour thing. So that conference, and then, continuing to just kind of try different things. Don't feel like you've got to be an expert right out of the gates. Just try some stuff. Yeah. But like Neil said, and Gary Vee had told him, like, you just do it with no expectation. Just eat shit for a while. Throw stuff out. Don't expect anything in return. You'll find your own groove. And I'm still finding my own groove. It's been, almost 2 years, and I'm still kind of evolving some things, but I've got some things that I do consistently, and that's a big key. You know this too, because you preach it also. Like, you've got to really be consistent. You've got to stick with it. No expectations. Put stuff out that is of value and is of use and is meaningful to people or your audience. Once you identify what that audience is, and then you'll be in better shape, and you'll start to see some results from this and see how it can really work for you.
How long do you think you've been putting out content to where maybe you can say, hey, this is starting to work? Okay. How long do you think it's taking you from start to maybe to getting to that point?
Okay, and I love that question. I've answered in a few different forms for some people. You have to have a very loose answer or definition for what is working. Yeah. Is working meaning that it's generating you leads? Is working meaning that it's now people are willing to at least have a meeting with you because they finally have heard of you? Is working meaning that you now actually have a reputation and that someone's like, oh, that guy must be something, to where you have a name, you have a voice, you can stand in the room. You're not just an outsider. Like working is going to have, and it's going to go through different evolutions. I think in the beginning, working for anyone that's getting started with creating an online brand and a presence in the real estate, which is, mortgage or real estate itself, that whole space has got to be first. People just have to know about you. That's it. Yeah. Don't try and put some stipulations on it that if it's not generating business by the end of Q4 of next year, I'm going to drop it. And
an actual lead or anything.
Yeah. That will come in time. I promise you it will, even by accident. There are idiots that are doing a shit job of this online, and they get tons of leads and business from it. So if it's working for them, it'll work. Like, it will eventually get there, but build it right, and first creating a little bit of a reputation, a little bit of a presence so that you're heard of. That's what you want. If you are starting to make connections with people like, I've heard of you, or I saw something, that is forget about they want to close a deal with you, they want to transact with you.
That's a win.
That right there tells you, number one, it quantifies that this is working. It validates the effort. And two, it shows you now how this is going to open doors for you. So for me, the whole first year was spent using this to open doors. It got me in front of more people, in front of other networks, other groups of agents that I couldn't get anyone to return my call or email or remember my name. And trust me, I'm the only guy with my name in my space in the Bay Area, at least as far as I know. Yeah. So it's not like I'm Bill and there's 50 Bills that do mortgages. No.
Bill Johnson.
I met this one guy, this one agent in particular. I remember because it had been 5 or 6 times over the last year we'd met each other, and the guy is too cool for school, but he could never remember my name, and I'd see him at a mixer or something. Remember my name. Finally, when I started putting on content and engaging his content, and his algorithm picked me up and started putting my stuff in his feed, when I saw him, he's like, dude, I've heard of you. And I was like, yeah, man, we've met 5 times, bro.
Oh man,
Yeah,
I get that too. Sometimes it's like, they see my last name and it's like, yeah, I'm the only guy out here with that last name that's doing loans. Like, come on, I know you've seen my name.
Yeah. So that was it. I mean, I think for me, it was all about just getting recognition, creating, and just getting my name out there and just becoming better known. And then the second year was really about taking all that awareness and that mental real estate that I was starting to capture and now converting it. How can I convert them into opportunities? How can I take these things a step further, advance the relationship, if you will? And that's where it started to, of course, yield better results in terms of the bottom line, more leads, more traffic. And then you can really take this thing, and the sky's the limit with it. But you want to start reasonable. And I think for everyone, what reasonable is defined as is just making yourself more known. That's it. Just start there.
Now, in that first year, were you spending like a ton of money on ads and stuff like that? Because I talked to a lot of agents, and we just did one of our digital boot camps, and some of the questions were always about, hey, can I boost this? Hey, can I spend money on that? I know for me, I kind of made the mistake of, I went down the path, and I had a company that I was working with at the time, and they had a platform, but I spent a shit ton of money on Facebook ads. I think we got our name out there, but it wasn't to where it translated to business per se. However, I think what we do now has done, I think in half the time, we've probably gained more of an audience, more engagement, because we've changed the entire like look and feel of what we say versus just putting out, I think, what was traditional real estate content and just putting money behind it. So were you putting money behind any of the stuff that you were doing early?
No, only in the way of boosting my posts, which and Instagram offers people, a really, really affordable way to just increase your reach, given that, the algorithm has kind of sucked out a lot of the oxygen from the normal visibility channels of who would normally see some of your posts and your content, like when it comes to your own audience. But if you want to push it out, it's very, price effective and cost effective to be able to boost your posts from time to time. If you've got a little bit of a sharper one and you think, I want to just put some more legs on this, that would be the only thing, for the first year that I was throwing any money behind. Lots of content, and then just sharing it. You got to do that work for free, offline, after hours, whatever, which is engaging more people, spending time doing a lot of outreach, a lot of commenting, a lot of liking, trying to be genuine, responding back to the people that are engaging you in general. Like, that's super key. Like, you can't forget about, those manners, if you will, online manners, and doing that stuff. But if you do it and you kind of, you do it bare bones for a bit, you don't have to be throwing a lot of money behind this. It's just your own sweat. But you can develop a lot of sweat equity in the online space pretty quickly if you think about it in a relative short period of time, if you're willing to put forth the effort.
How important is the engagement part? Because that's something that at Loan Depot we've been kind of stressing on social media a lot, like through Chris and Alec and a lot of these other guys that are always posting stuff. How important is that? Because I think that's something a lot of people miss. I know I was guilty of that early on when we started posting, but how important is that to, like you said, to like, comment, and put thoughtful thoughts out there on someone else's page?
It's huge. Number one, it's just genuine, right? It's just respectful. Like, if people are engaging you or they're putting out stuff, everyone's doing this to try and create something. They want to create a conversation. They want to create some waves. They want to create opportunities. So understanding that we're all on the same boat that way, why not collaborate that way in terms of how you respond and how you, re-engage people back. So for one, it's just, it's kind of a polite, online citizen type of obligation that we all have. Like, everyone just kind of, spread the love a little bit, You're sharing, they're sharing, you engage, they engage. Like, just be, and if you are that guy and you're seen as that guy, it's pretty infectious and contagious. It does seem to come back around. But more importantly, what it does is in terms of the algorithm itself and how it impacts it, the more people that you're engaging with, that you are already connected to as followers of each other's content and of each other's accounts, the higher likelihood that your stuff that you post on a regular basis, just natively to that platform, is actually going to show up in their feed. Because now it doesn't, I mean, it's constantly evolving and no one can really put their thumb on it. And everyone's trying to make a lot of money by cracking the code and posting videos about, I've got this figured out. But really, the only way to do it is just to get out there, make as many touch points you can, try and genuinely connect with people. And, bringing it back to your question, it's just super important. But number one, it's polite. But two, if you want your content to start having more legs on it, to be able to run and reach, you're going to have to do this. You cannot just post and then simply only reply to engagement that comes in from your post. That's obviously important. Some people don't even do that.
Yeah.
You need to do that, but then you also need to spend some time in people that, like, find people that you follow that for whatever reason, and they follow you, that they must not be seeing your content or they never engage it. Find those people, seek out 10 or 20, do it, once a day, and go comment on at least a few of their posts genuinely. Don't just put up like a thumbs up, or write something.
Yeah.
And hopefully it's something more recent of theirs, but you'll find that that'll pay some pretty big dividends because they're going to start seeing more of your stuff. So if you want your marketing strategies to pay off, you just need to be a better engager, period.
That's so key. And that's one thing, like I said, we've been stressing a lot, because even if you're not great at coming up with content, I think just by going out and reaching out to other people, you'll start to bring more attention to, like you said, your page at the end of the day. So it's not only creating content, but engaging with everybody else. That's again what social media was all about. So we have to use everything it was, designed for at the end of the day.
For sure, man.
So we're going to wrap up here. Any last thoughts, man, for anyone that's listening, whether it be realtor, lender, entrepreneur, anyone that's listening right now?
No, just, just do it. That's all. I mean, stop holding back.
Yep.
Just do it. Don't worry about how it's going to look, how it's going to pan out. Just start trying. And, before you know it, you'll find your own rhythm with it. But don't wait, because if anything, now has been a very, very good reminder about how important it is. And I don't mean because, of necessarily just because of the times that we're in, but think about more specifically the times that we're in. Like, people are stuck at home. They can't go out and do things the way they did. So if you didn't have a brand, it's now being exposed more than ever. People were telling you that and harping you on it before. But now if you didn't have a brand, you're like, shit, I can't really do anything. But for those people that did have a brand, it's been business as usual. They're just doing it differently from home or from a different office. But everything, the beat goes on, their voice is still carrying out there in the market space. So that's a reminder to you, or should put everyone on notice, that if you're not doing this, you need to do it, because things like this are going to happen, to where it's going to confine everyone to be stuck at home on their sofa or whatever. And they're looking at these devices and absorbing content from them.
All
if you're
day
not there
long.
speaking, it's you're going to get left in the dust, man. But no, outside of that, Sean, I'll just say in closing, man, that I, appreciate all that you're doing in this space, and bringing awareness, whether it comes to marketing or just good vibes and energy and great collaboration content that people can get inspired from and learn from, whether they're real estate people or entrepreneurs. So I applaud you for doing that, man. I know how invested you are in the community down there in Vegas in trying to do things for the town, and obviously, serving people in that market really well. And I'm from Nevada originally, so that means a lot, man, because I'm always rooting for my home state. So I appreciate you and applaud you, man, for all you're doing there.
Thank you, brother. I appreciate it, man. Thanks for coming on. And, obviously, you guys are an inspiration to us too. So I think, we'll just keep pushing our content, pushing the good word, and trying to change the mortgage industry, little by little every day.
Absolutely, man. Thanks, Sean. Appreciate you, brother.
Appreciate it. Thanks again. Once again, guys, thanks for tuning in to the Self-Made Podcast. Don't forget to like, comment, subscribe, and we'll keep bringing you more good content to help you with your marketing and real estate and anything in the mortgage space. So signing off. We'll catch you in the next one.